WPI data which is flashing on your screens, it is a deflation of 1.2% in October versus 0.13% inflation on a month-on-month basis. So it has slipped into a deflation. That's primarily because of the food prices. So there was a decline which was expected in terms of the food prices, and that has come through. And that's the reason why you're seeing that October WPI to come through in terms of a deflation. We do have Aditi Nayar who's joining in to give us her perspective on it. Aditi, what was your, what were you penciling in terms of WPI for the month of October? And what do you think is the key reason for this deflation?
Thank you, Ekta. We had actually penciled in a deflation of 1%, so it's come in a tad bit lower than that at minus 1.2%. And mainly, of course, like you said, the base effect for food inflation was particularly high, and that is something that is going to narrow now going forward. So this might be one of the lows, I think, over the next couple of quarters. I do expect that there is going to be a slight inching up overall in the trajectory of the WPI from here on out. But also, if we look at the non-food manufactured products and look at manufactured products in general, there also month-on-month the momentum has been very low this time, and that's partly because of the GST rate cuts, the rationalization basically seeping through. We had expected perhaps to see a larger impact on the CPI side than on the WPI side of the GST. But I guess, even as far as the inputs are concerned, possibly, a similar trend has gone through. And that's also helped to keep a lid on the overall the core WPI inflation.
What is the trajectory that you are expecting in terms of food prices and WPI?
See, for the food prices, as such, this year the momentum remains very slow for a lot of food items, right? So that's a positive. We've got a good monsoon. We've got a good kickoff even to the Rabi sowing, for instance. So generally the trends are very good this year. But in any case, we have a very high base that is there. Now, over the next few months, I think the benefit of that will start to go away. So for the CPI as well, for instance, we do expect that it may inch closer to 1% by the end of this quarter and move into the 3% handle in Q4 and then perhaps cross the 4% handle in Q1 of next year. So overall, now the trajectories from here on out look like they're going to be on an uptrend. How quickly the uptrend happens is something that we'll be waiting to see. The WPI tends to be a lot more impacted by commodities, including global commodities. So, of course, what happens in terms of global commodity prices will play a larger impact on the WPI than necessarily the food price trend. But overall, I would expect that the WPI is going to be very flattish in the current quarter and average maybe 1% or thereabouts in Q4. So the average WPI inflation for this year is going to be marginal.
All right. Aditi, what are you penciling in from the RBI come December now? We have this additional layer of information, though it's not the determining piece of information for the RBI. But nonetheless, after CPI and now with this deflation coming through for WPI, what are you expecting from the RBI in December, as well as the trajectory, say, for the next two meetings?
So possibly we'll get like a final rate cut from the RBI in its December meeting. I mean, the last set of inflation prints certainly supports that. We are fine-tuning our GDP forecast for Q2. It's looking like it's going to be, 7% or thereabouts. So that's a step down in terms of the pace of growth from Q1 to Q2, but it's still a very strong number. Now, with this, our projection of GDP growth being around 7% and the CPI and the WPI numbers that we have so far, I think it's a close call, but I would say that it's definitely tilted toward a 25 basis points rate cut. Now, if we end up getting a surprisingly strong GDP number, then I think we'll have to take a relook at whether that last rate cut will come through at this point in time. But yeah, as of now, that's our call, and not expecting any further rate cuts after that. So I don't think we'll get any more rate easing from February onward. Let's see how long the pause cycle lasts then after that.
Okay, sure. Thank you so much for that, Aditi, and thank you so much for joining us on the show this afternoon as well. On that note, we're going to step into a very short break. On the other side, we'll have the management of Rainwood Children's